hospitality in Nigeria. You're a pro at making guests happy, right? But taxes? Yeah, that's where things can get a little tricky. Fast. Don't worry, we're going to break it all down. This is your go-to guide for handling your tax stuff with total confidence.
So you run a hotel in Nigeria. Perfect. This quick guide is for you. Whether it's a small guest house, a buzzing restaurant, or a big event space, getting your taxes straight isn't just important, it's everything. We're going to make this super simple and fast. Ready? Let's jump in. Okay, think of your business like a house you're building. The great service, your amazing staff, the cool branding, that's all the stuff people see, right? The walls, the roof. But tax compliance, that's the foundation. And without a solid foundation, well, the whole thing could come crashing down. So let's get that foundation rock solid. Now, you might be wondering, is this really for me? Well, take a look. If your business is on this list, hotels, resorts, restaurants, event centers, you name it, then yep, you are exactly where you need to be. We built this guide with you in mind.
Okay, let's get to the heart of it. When you boil it all down, the entire tax system for your business really just rests on 4 main pillars. If you can get a handle on these, you're pretty much golden.
Yep, you heard that right. Just 4. It might feel super complicated, but honestly, everything, and I mean everything, rolls up into these 4 key areas. Let's tackle them one by one.
First up, income tax. This one's pretty straightforward. Your business makes a profit? Awesome. You pay a slice of that profit to the government. You can think of it as a tax on your success. The real trick here is knowing exactly what your profit is. That means you got to track every naira coming in and every naira going out.
So what counts as income? Well, it's pretty much all the usual suspects. We're talking room bookings, what you make from your restaurant and bar, any money from renting out conference spaces, basically any service you charge for. Pillar number 2, value-added tax, or VAT. Now, this one's interesting because your role here is basically a tax collector for the government. You add the VAT to your customer's bill, you collect that money, and then you pass it straight on to the tax authority. Super important to remember. That VAT money is never really yours. You're just holding on to it. And where does this apply? Just about everywhere. Your room charges, the food you sell, hosting an event, renting out facilities. All of these things need to have VAT added to the final bill. No exceptions.
All right, pillar number 3 is called tax deducted at source. Most people just call it withholding tax. Now, this one flips the script. Instead of collecting tax from your customers, you're now deducting tax before you pay some of your vendors and suppliers.
So who are we talking about here? Think about it. You hire a consultant for advice? You got to withhold. You book a musician for a Saturday night gig? Withhold. An event planner? A contractor for repairs? Yep, you get the idea. You need to deduct a percentage of what you owe them and send it to the tax office.
And our 4th and final pillar is pay as you earn. You'll hear it called PAYE. This is all about your staff. As their employer, it's your job to calculate and deduct income tax from their salaries every single month and then pay it to the government for them.
Okay, so we've covered the what's, those 4 big tax pillars. Now let's talk about the how. Before you can even start paying these taxes, you have to get set up the right way. This is square one.
And look, it's not as scary as it sounds. It's really just a 4-step process. Step 1, get your business officially registered with the CAC. Step 2, get your tax identification number, your tax ID. Step 3, register for VAT specifically. And Step 4, get your business and employees registered for the PAY system. That's it. All right, once you're all registered, tax compliance isn't a one-time thing. It's a rhythm, a calendar you have to follow, and it's so important to know the difference between what you have to do every single month and what's just a once-a-year kind of thing. So here's how to think about it. Your monthly stuff, that's like the daily pulse of your business. It's all about remitting the money you've collected for other people, the VAT from customers, the PAYE from your staff's salaries, and that withholding tax from your vendors. The annual stuff, on the other hand, is the big picture. That's when you file your main income tax return, which basically tells the whole financial story of your business for the past year. Okay, you know the rules, you know the rhythm. Now, let's talk about how to stay out of trouble. Seriously, a lot of businesses stumble over the same few things, so if you know what they are ahead of time, you can just sidestep them completely. So, what are those big traps? What are the common mistakes that land hospitality businesses in hot water? Let's name them so you can avoid them. Okay, here are the top 5 risks. Number 1, forgetting to charge that. This can come back to bite you with a massive bill later. 2. Not reporting all your sales accurately, especially cash sales. That's a huge red flag for auditors. 3. Failing to remit PAYE. This is a big deal because it messes with your employees' tax records. 4. Sloppy guest records. If you can't prove what you charged, you can't defend your income. And 5. Forgetting to withhold tax from contractors. Yeah, these are definitely the landmines to watch out for.
So what's the takeaway here? It's this. Your absolute best defense is keeping clean, accurate records. Every guest bill, every supplier invoice, every little detail matters. But think about it. It's not just about defending yourself. Good records give you a perfect, clear picture of how your business is actually doing. It helps you make smarter decisions about everything. So it's not just about tax. It's about being a better business owner.
Whew, we've covered a lot, right? So, to tie this all together, let's look at a simple checklist. You can use this right now to do a quick health check on your own business's tax situation.
Okay, let's run through it. Is your business registered with CAC? Check. Do you have your tax ID? Check. Are you charging that on every service every single time? Are you filing those VAT and PAA returns every month? Are you withholding tax from vendors? Are your records clean and up to date? And finally, did you get that annual tax return submitted? If you can say yes to all of these, you are in fantastic shape.
And that brings us right back to where we started, with that idea of a building. You know, a successful hospitality business isn't just about good food or comfy beds. It's about building something that's strong, something that can withstand anything. So the real question is your business built to last? Because that solid foundation of compliance, that's what makes all the difference.